Good morning, traders. It's Mark here from Day Trading Room. Time is 20 to 11 on Tuesday, 14th of June. Just thought I'd do a little quick video to discuss yesterday's action. Posted a video for Friday's trend down day yesterday. But following on again from the theme of focusing on one particular setup, I want to focus on how to tell if the market has put in a low, whether to fade that low or whether to look for a continuation. Now, coming up to what time were we? 10 past 6 approximately London time yesterday. The market started to probe lows that we've tagged several days ago. If I bring up a 5-minute here, you can see how key this 1850, 1860 level was. We tagged it on Friday once, bounced and re-tagged it into the close. But what's interesting to me is the aggression of the bounce off that level on Friday. We can see there the strength of that move. After we tagged it, we pretty much just popped aggressively, and even this was after the actual cash close. The futures were still open, but we got that reasonable pop, and actually ended up drifting up overnight and gapping up around there. So with not allowing it to go any further than that. So when the market revisited that level today, I'm paying close attention. But what I really want to talk about is how to use the ticks and how to read what other people are thinking and how they are putting yourself in other traders' shoes to try and understand where the market may potentially move next. So let's run through exactly what's happening here. Okay, so the market's drifted down. We'd filled the gap. You'd have to excuse me on my laptop here, so the audio is not quite as good. I haven't got my headset, and my charts aren't the same as usual, but there's the gap. Let's put that in just for reference purposes. That's about the gap level. Okay, so we gapped up, we just drifted around, and we started to drift lower. So it's just basically shaking out a lot of the bulls, and this was really this move here. Once we filled that gap, the gap couldn't hold. We start to move low, we start to approach lows of Friday, and bulls, or in fact all traders, have in their mind, okay, are we going to continue the same theme as we have done for previous days and just push through lows and make new lows? So that's the sort of rush we got here. Now when we tag this level, we've got really low tick readings. Everything looks as if it's another leg lower. Okay, really low tick readings, constant drive lower in price. We approach our 57, it's between 50 and 60, but 57 I think was the actual low. We approach that and we break through it. Now this is where it gets interesting, because we have really low ticks. We've got minus 1300 ticks there, and the price is starting to hold. Now that's not unexpected in itself. As you probe to lows, you do find residual buyers sitting there just scooping up contracts, as you do stocks or whatever you're trading. That's the norm. Very rarely will you get a really push low without some sort of defense on the way down, or some sort of buyers on the way down stepping in front. But this was pretty pronounced, and even though the ticks were very low, and now again, continuing from the sort of topic last video about what is happening with the ticks, when you think about the ticks, if they're going into serious negative territory, then it means that the bids are being pounded. They're being pounded across the universe of New York Stock Exchange stocks. So, but if the price is not going any lower with several minutes, in fact we had 3 minutes of seriously low ticks, but the price is not going any lower, what can we deduce from that? Let's just think a little bit what the ticks are again, remind ourselves, and then we can deduce exactly what's happening. So the bids are being hit, but they are not being removed. They're not lifting. We're not getting the next bid print, and we're not getting that stock moving down, and ultimately the index moving down. So that's our first clue. that potentially we could have a bounce on, because there's solid support there, even if we're not looking at the tape, even if we're still learning the tape, even if we're struggling to combine the tape reading with our trading. That's fine. It's a skill that comes with time. But we can use the ticks and the price relative to the ticks. Everything is relative to everything else. When I'm reading tape, it's the depth of market relative to the time and sales, relative to the price. The price is relative to the position that we're in the day, relative to the position we're in the week, relative to the time of day. Everything is relative, and which is why, we're looking at ticks, we're looking at in relation to the price. So, ticks were pushing lows, price could not go any lower. So that's our immediate thing. Now, if we're aggressive, we can take that long at the low, near the low, with a very tight stop. And if we're tape reading, we can probably spot that buyer and hide behind it. However, we can be a little bit more defensive and wait to see some strength coming in. So our lows held. We've seen the low ticks, we see a pop in ticks, and we see ultimately a pop in price. Okay, great. So we're now getting what we'd expect to happen as ticks push up. So again, thinking about what the ticks are, offers being hit. This time offers are lifting because the price is moving up. So it's expected response. Okay, ticks are moving up, price is moving up. Right, still not ready to get in. We've seen strength, confirmed a low. Seen strength, now we want to find the trigger, assuming we haven't already picked up on that low. So we're just looking at a little setup here. Okay, push up. Now we're at the pivot point, if you like, in the candle, the key candle, the candle that we need to look at to confirm whether we're going to take this long or whether we're going to just leave it to run further lower. So what are we looking at? We're looking at, let me zoom in a little bit more. We're looking at the ticks. Ticks push low. They don't push anywhere near as low as we had been, considering we'd been at minus 1200 for 5 or 6 minutes. That looks like 5 minutes in a row. We're not getting anywhere near that. In fact, it's minus 800, which is, again, it's all relative. If 800 came out of the blue from nowhere, when we've been trading at 200, 300, and then we get a minus 800, then we pay attention to it and we think that's weak. But when we've just had minus 1200 ticks, minus 1300 ticks, then we get a minus 800. The price pushes down, okay, as expected. Now let's see. Now immediately, now look at the distance as well. We moved 60 down to 55. So we're talking six ticks or so movement on that tick pull back down to minus 800. Okay, then the next candle we see that aggressive buying that takes us above that high. It takes us above that high immediately. In other words, now we've got some urgency to players. Now we can see that buyers are interested. Shorts are looking to cover. Everyone is looking at the same thing, and you've got to put yourself in the shoes of everyone. Now, if that level held yesterday, people are going to be watching it. Shorts, any profits in the bag are going to be thinking, okay, let's see. If that breaks, great, hold on. If it doesn't, I'm not going to hang around, because yesterday it popped pretty aggressively. So, and also buyers, if they're looking to buy around these levels, they're going to say, okay, let's see, that low held yesterday. If that low holds again today, I'm going to get in quickly, because I think we're going to get a big push up. So a lot of people are looking for that snap, so they don't need much of a reason to initiate some buying, whether that's short covering or initiating a long position. So these two candles here are giving us the clue to take that long entry. So ticks pulling back, price not allowing us to push lower, didn't get anywhere near a revisit. It's a key level. We had a snap back up yesterday. This candle here pushes above that high immediately, and if we need that extra confirmation, we've got this candle here showing that really, that's pushing a lot higher. Ticks have now rebounded pretty aggressively. Okay, the tick pulled back to 0. So if we want even further confirmation, we can then wait and see what happens in the subsequent candles. Look, consolidation. Look, think if you're a seller. Okay, any of these opportunities here, this opportunity here, you'd be looking to get on it and get a good sell, front running that break lower, wouldn't you? that's what you were thinking if you had a lot of contracts to offload. This push up, you'd be thinking, okay, great, I've got an extra 10 points or so higher. I can get selling, get a 10-point head start before that break happens. And that's what that candle is. That's people still thinking, okay, we're going to break through. But when that demand outstrips that supply on the next candle, and we're seeing the matching ticks pushing back up, then we can think, actually, you know what, this could be the bottom. This could be that level we're looking for. And history from yesterday showed us that we had quite an aggressive push, so we've got that pattern on our side. We've got a lot of things going for us, and the risk is quantified. Okay, it's a little bit larger than perhaps we're used to. 15 cent risk or so, perhaps 15-20 cent risk, but we can look for further upside. We can look, because we know that if in fact this is a bottom, then there's a lot of people who are going to be running for the door on it. A lot of people are going to be covering. We've already come down a long way. If you start to extrapolate a little bit further in your time frame, come down a long way. We're still on a daily, up high. We've pulled back quite a bit, but generally we're not talking. We've had a several year bear run. So all of this goes into context, all relative, it's all in relation to other parameters, other time frames, other what have you. So just a little bit about thinking through the trade, thinking through what other people are seeing, because other people are judgments clouded depending on their position and what they want. So if they want to initiate a long and they see this, they don't see it continuing to the lows, and they see a subsequent push higher and ticks not confirming by not going to lows, they're going to start thinking, okay, I'm going to try and get to my long. You think about people who are short, who are in profit on the short, they may not have a lot of profit, don't want to give much back. They realise that the market has snapped back quite aggressively, and so don't want to hang around if they're covering their short position. So just think through what's happening. Just think through what happens when you get those low tick readings on the tape, on the ticks, and think about what happens when the price isn't going lower. Think about what that actually means in terms of what's happening on the individual stocks and the possible consequences for the index that you're trading. So yeah, just a little look at a certain setup. Hopefully that's been of some use. I quite like those sort of setups, because they do give you a very good head start if you're looking for that swing position, or if you're looking just to scalp, you get that impulse, take some off free trade, look for further targets up to highs, or however you want to manage it. If you get a good entry, managing the position then becomes easier the better your entry is. So yeah, a little bit different again, just carrying on from that theme, just talking about specific setups and running through some things. So good trading, guys. As always though, manage your risk. Doesn't matter how good the setup is, anything can happen. We could have just plowed through lows there, no matter how good everything looks. The ticks look great for us, everything's fitting into place, tape looks good. If a big seller wants to come in and slap it right down to lows, he will do so. Manage your risk, put your stops in, whatever you need to do to manage your risk, just do it, because that's what we want, to preserve our trading capital. So good trading, guys. Have a great day today. I shall be back with another video probably later in the week. Take care.